So in this case, John's employer paid his medical insurance. So the premium will go into this section, medical insurance premiums paid by your employer. You should receive a statement from your medical insurance provider. It will state the total gross premium paid. So the figures go here for John and Mary. If you paid your medical insurance premiums yourself, you would enter the amounts in this section. All right? So that's medical insurance. Medical expenses are separate. We have them at the bottom. Very similar scenario to the previous one. They paid in total for all medical expenses during the year 1,000. So consultant fees, GP fees, prescription drugs, medicines, and so on. In total 1,000, but VHI refunded 500 to them. So the figure has to go in here. So they are due a tax relief on the remaining amount, on 500. All right? Okay, what is the next panel? So restrictions or relief, and we have the calculation. I will show it to you again on the PDF. Similarly to the previous scenario, a summary of all the income, reliefs, and so on, and the calculation of taxes. So John had 50,000, earned 50,000 from his employment. Mary earned 30,000 from her trading, from her beautician business. Again, Mary also received 1,000 illness benefit. Their total income for the year is 81,000, and this is what the income tax is calculated on. This is the basis for income tax calculation for both of them. All right, taxable income 81,000. Then the tax is split into thresholds. 70,600 is the threshold for a married couple jointly assessed, and the tax is calculated on 20% up to this amount. So 70,000 at 20% is 14,120, and the balance is taxed at 40%. So it's 4,160. The total tax liability for both of them is 18,280 for the year, right? Majority of that would already be deducted by John's employer. We will see it later. These are their tax credits, so the joint married couples tax credit, employee tax credit for John, self-employed tax credit for Mary, health expenses relief, medical insurance relief. So the total of their tax credits is 6,800. We deduct this figure from the total tax liability, and we arrive at net tax liability of 11,480. All right. Next, the second component, universal social charge. So for John, for John goes first. His basis is 50,000, that's his income. Universal social charge is calculated by the system automatically. In total is 1,500. Then universal social charge for spouse, for Mary. Her income was 30,000. The calculation is done by the system. It amounts to 672. The third component, PRSI. There is no calculation of PRSI for John here because it has been paid already by his employer. But Mary, as self-employed, has to pay her PRSI herself. So that's the PRSI calculation for Mary. So her income was 30,000. The calculation is at 4% of her profit. So it's 1,200 PRSI payable for her. Then we have a summary of final tax liability. So what we calculated above is summarized here. So there are income tax, universal social charge for John, for Mary, PRSI for Mary. The total amount of taxes, three components, income tax, PRSI, and universal social charge is 21,725. Then their tax credits are deducted from it. Then whatever tax John paid already is deducted. His employer already deducted 10,000, so it's input here. John already paid 1,000 of the universal social charge. So the total of tax credits and release is 17,800. This is deducted from this figure. So the final tax liability payable for both of them is 3,925. for the year. This is how much extra tax they have to pay for year 2019. Now we need to come back to our ROS application.